Everything is back going. So again, we have a request for bill introduction.
Mr. Chair, this is Representative Shu. I have one.
Go ahead, Representative Shu.
It's 21 RS 0842, and this bill enables commercial PACE in the state.
Rich, did you get that okay? Okay, thank you, Representative Shu. Without objection, the bill will be introduced. Any other bill introductions? This is our last day for bill introductions in our committee. Do we have any other ones? Any live or remote bill introductions? If not, thank you for yours, Representative Shu, and we will move on. Today we have 2 hearings, so this will start out a week that we'll have 2 hearings, and then we'll work 2 bills come Wednesday and look at what else we might be able to do going along. But we will, today we have our first hearing is on Senate Bill 15, and we will start out with our reviser. If you can please give us, and I'll point out there is a fiscal note in your packet of materials that was sent to you, but we will have a briefing on the bill from our reviser. David?
Thank you, Mr. Chairman. Can you all hear me okay?
Yes, we can.
All right, great. Senate Bill 15, this was a Senate version of the bill you all might have remembered from a couple weeks ago, HB 2069. These are companion bills, the Senate and House mirrors, at least as they were introduced, relating to the Kansas Economic Recovery Loan Deposit Program, and updating the field of membership requirements for credit unions, and then this the allowing the privilege tax deduction on agricultural real estate loans and single family residence loans for those financial institutions that are subject to the privilege tax. The Senate Committee, the Senate Financial Institutions and Insurance Committee did adopt some amendments to Senate Bill 15. I've kind of listed them out here in the bill brief. The first was the definition of eligible borrower in the loan deposit program. The Senate Committee added the language that the eligible borrower could not have more than 100 full-time employees maintaining offices or operating facilities and transacting business in the state of Kansas. And as we'll see later, this was further changed on the floor, but we'll get that in a second. The second committee amendment was to the definition of eligible lending institution in the loan deposit program, relating to the institution of farm credit. They'd have to have a branch, at least one branch in the state of Kansas, the Farm Credit Institution, and then added language stating that the legislature shall perform a review of the Kansas Economic Recovery Loan Deposit Program as part of the state treasurer's annual report on the program on or after January 1, 2024. Fourth amendment put on by the committee was just that it required the eligible borrowers in the loan deposit program to certify that the loan will be used exclusively for expenses involved in the operator on the borrower's business. And then they added the words in Kansas to make sure it's going to be Kansas expenses. And then a fifth amendment was adding language to provide that agreements between the eligible lending institutions and the state treasurer for that economic recovery loan deposit be placed for a period of time not to exceed 10 years, and that is considered appropriate in coordination with the underlying economic recovery loan. And finally, the Senate Committee amended the definition of qualified agricultural real estate to include loans in the privilege tax deduction to mean loans made on real property that is substantially used for the production of one or more agricultural products, and that have maturities of not less than 5 years and not more than 40 years, are secured by first lien interest in real estate, except that loans may be secured by a second lien interest if the institution also holds the first lien on the property, and have an outstanding loan balance when made that is less than 85% of the appraised value of the real estate, except that a loan for which private mortgage insurance is obtained may exceed 85% of the appraised value to the extent the loan amount in excess of 85% is covered by the mortgage insurance. And then as the bill went to the floor, there was a floor amendment placed on the bill, again, on that definition of eligible borrower, and that strikes the 100 full-time employee requirement and inserted 200 for the number of full-time employees maintaining offices or operating facilities and transacting business in the state of Kansas. And then the Senate's final action vote on Senate Bill 15 was 39-0. I can stand for any questions, Mr. Chairman.
David, any questions for David? Representative Hoheisel.
Thank you, Mr. Chair. Thank you, David, for that breakdown. Just to clarify, to be eligible for the linked deposit program, a business does not have to show damages, financial damages caused due to COVID, correct, to be eligible?
No, they do not have to show damages.
Okay. That's all I needed. Thank you, Mr. Chair.
Any other questions for David? Any online? No. Thank you, David. And now we'll call on Melissa. If you have any additional that you could add for us, Melissa from the Senate, or any other change information that would be helpful for us.
Thank you, Mr. Chairman. David has done a good job of capturing and incorporating those Senate committee amendments. As this committee will recall, when you looked at House Bill 2069, neutral testimony from the Office of the State Treasurer, and the State Treasurer himself spoke to some concerns with the bills and some improvements that the Treasurer's Office felt might be needed for the bill, and those were successfully negotiated and added to the bill. And so when the Senate committee considered the bill, it considered two separate balloon amendments that were prepared by the revisor's office. The first amendment incorporated the language that had been requested by the state treasurer's office in consultation with proponents of the bill. And as David mentioned, that included the language regarding the number of full-time employees, which was further amended on the Senate floor. The language regarding for the federal farm credit institutions that had at least one branch located in the state of Kansas also required legislative review, and that was language David reviewed that the legislature would perform as part of its review of the state treasurer's annual report on and after January 1. They would look more closely at the programming for the linked deposit program. In addition, there was a specification regarding the language for an eligible borrower to again insert in Kansas. So this again was meeting the concerns regarding residency that the state treasurer had presented. And then also there was a discussion regarding the maturity of the loan and what period of time would be appropriate. And so language was inserted to take away the annual renewable 1-year maturity for a period of up to 10 years, and just instead say the loan would be placed for a time not to exceed a period of 10 years, and that is reasonable, considered reasonable and appropriate for the provisions of the loan program. And making sure I haven't missed. Those were the ones that spoke specifically to the concerns that the state treasurer had presented. And then the committee had one other balloon amendment that was prepared on behalf of the representative of High Plains Farm Credit, who was representing the Farm Credit Association institutions. And that was language David referenced in the privilege tax provisions of the bill to change the term qualified agricultural real estate to instead be qualified agricultural real estate loans, and to add the criterion that are included in the Farm Credit Act. Once again, this was just a matter of adding criteria that would be equal to the criteria placed on farm credit institutions for those institutions that would be eligible in providing the qualified agricultural real estate loans. And As David mentioned, there was one additional amendment considered in the Committee of the Whole. It was termed a friendly amendment, but one that just hadn't been drafted and available at the time of the Senate Committee's consideration, and that was increasing the number of full-time employees for the eligible business from 100 to no more than 200. And that's the summary of the amendments presented to the Senate, both in its committee and in Committee of the Whole.
Melissa, any questions for Melissa? One question, Melissa, this is, of course, we heard this bill as a House bill earlier this session. And other than the amendments that we talked about, and we did discuss those in our committee as potential amendments that would come up, and it sounds like all of them did, plus one. And so other than that, this is the same bill that we heard earlier this year, and pretty much the same bill with the amendments added that was heard last year and passed out of the committee and passed out of the House chamber and the Senate. Melissa, your sound is off for some reason.
Sorry, here we go. One more time. As David explained, the underlying bill was Senate sub for House Bill 2619 last year. The only changes that were made to it as introduced as both House Bill 2069 and Senate Bill 15 had to do with the date regarding rules and regulations, as well as the date of the tax year where the privilege tax exemption and change in the net interest income deduction would apply. So then, as David explained, those amendments then were added by the Senate committee. Those are the only differences now would be those amendments incorporated by the Senate committee action and Committee of the Whole. And were amendments, again, that were discussed in this committee with the exception of the change in the number of full-time employees.
Thank you, Melissa. Any other questions for Melissa? Thank you. Representative Toplicker has a question for you, Melissa.
Thank you, Mr. Chairman. Just wondered if the fiscal note changed any from the Senate amendments? If it had changed the fiscal note at all?
The fiscal note that we have still that came in with the Senate bill is the same as what we saw earlier. So I didn't see a change in it.
Okay, thank you, Mr. Chairman.
Thank you. And thanks, Melissa. And this will officially open the hearing on Senate Bill 15. And we will start with the proponents, and the first and only oral opponent is Alex Orr, Senior Vice President, Kansas Bankers Association. Morning, Alex.
Good morning, Mr. Chairman. Thank you very much for the opportunity to be here. I was hoping Representative Sampson would be here because I wanted to make a referee joke because I am a referee as well. That I wish they could have done a better job last night. Talked to my counterpart Tom Bruno as well, but like you said earlier, there's always next year. Thank you very much for the opportunity to be here today. Thank you to the revisers and staff. There has been a lot of work put into this bill on the technical side that we consider all friendly changes to this legislation. All the changes that you heard from David and Melissa, all were friendly in our opinion. We were in negotiations. I wouldn't consider negotiations, in discussions with State Treasurer Lynn Rogers, as well as Senate leadership and Chairman Jeff Longbine on the Senate committee. So they did a great job going over them. I'm going to be very brief today. You've heard my testimony on this. I've attached the testimony from January 25th to my testimony as well as a reference for you. But I'll just start here with the changes. I am Alex Orr, appearing on behalf of the KBA. The underlying language of Senate Bill 15 is identical to HB 2069 that you heard earlier this year, with a few minor changes, which ultimately led to a successful passage in the Senate last week of a vote of 39-0. The changes, I would highlight really 5 major Residency requirement, making sure that these loans are based for Kansas. Absolutely was the intent of the legislation. I mentioned that in my testimony earlier this year as well. Requiring farm credit institutions to have headquarters or at least one branch in Kansas. They have to have a location in Kansas to participate in this program. Makes complete sense, and frankly, I am embarrassed that I didn't catch that in last year's legislation. So once again, very friendly. The funds are used for businesses operating in Kansas with no more than 200 full-time employees, making sure that these loans are based for Kansas small businesses. Originally, it was 100 full-time employees, but after more discussion with State Treasurer Rogers and the Kansas Restaurant and Hospitality Association and NFIB Kansas, we thought that should be increased a little bit to cover more small businesses, and all parties agreed to 200 full-time employees, and that was a floor amendment. Also, a review clause in statute to make sure that this program is reviewed by you in the legislature to determine its effectiveness and whether the monies were deployed effectively. Also, to maybe review down the line, as I've always said with this, both proposals, these are long-term solutions, not short-term. These are processes set in place that we could utilize down the road if anything does go haywire again. So having a review clause down the road makes sense because maybe we can tweak the program as well to make it better. And then finally, the addition of language to mirror Farm Credit's federal regulation on qualified agricultural real estate loans. We've stated from the get-go, we never wanted anything more, excuse me, than their exemption, and this just mirrors their federal reg. Once again, extremely friendly. These 5 changes have made this bill better. And I do believe that is the reason why it was a 39-0 vote in the Senate last week. All parties have been working together, and we look forward to hopefully the eventual passage. Like I stated before, you as policymakers are strategically positioned to assist small businesses, including farmers and ranchers, at this critical moment in our state's history. Both proposals will provide long-term solutions to our ag and business community, and our farmers and ranchers and business owners will need every tool possible to get through this pandemic and through future crisis, whether it be health-related, financially related. And you should have a role in providing those tools. This bill is pretty straightforward. It's been around for multiple years. It's been vetted. It's been discussed. And we feel very strongly that we have a good product, a good piece of policy in front of you to consider. We respectfully request the committee decides to act on Senate Bill 15. They recognize the important benefits of this proposal and the fellow Kansans for the long term, and I would urge your support. And Mr. Chairman, I'll stand for questions at the appropriate time.
Alex, we'll go ahead and take questions since you're the only one that's going to speak on the bill as a proponent, at least what I have. So any questions for Alex? Representative Samsel?
Thank you and good morning, Mr. Chairman. Not to disappoint Mr. Oral, but the best referees usually stay in the background so you don't know we're here. So I'm trying a little bit of that this morning. 2 quick questions, if I may. The first one actually involves our fellow referee, Mr. Bruno. I'm curious what's on his mask because that keeps coming through loud and clear on the screen here. So his positioning next to Representative Woodard makes the, I don't know, I'll leave it at that. He can answer that maybe a different time. My actual question is, I appreciate all the good work that's been done on this, including the improvements. Is there any opposition that remains? And of course, I think we're going to be hearing from opponents, but your view of the world on what opposition, if any, remains?
I'm not going to speak for the opposition, Representative Samsel. I do know there was one group that opposed last time, the Kansas Cooperative Council, and there's mainly focused around the cooperative business model and the tax exemption piece of this legislation. Yeah, go ahead. Yeah, no, like I said, I will not speak for them. I believe they are here today.
Oh, okay, thank you. Well, I just didn't know if there was any that remains, but we'll get to that in turn. Thank you, Mr. Chairman.
Thank you, Representative Samsel. Any other questions? Representative Toplicker, do you have a question, or was your hand just still up from your last question?
Sorry about that, Mr. Chairman. Yeah, I was still up. Thanks.
Okay, thank you. Any other questions? No? Alex, thank you very much.
Thank you, Mr. Chairman.
Again, anyone that wishes to speak as an oral proponent to Senate Bill 15? Alex was the only one I had listed. If not, I call your attention to, in your packet of information, we have written proponent testimony from Aaron Propelka, Vice President, Kansas Livestock Association, Randy Stuckey, Renew Kansas Biofuels Association, Mark Toom, Vice President, Governmental Affairs, Kansas Association of Realtors, and Eric Stafford, Vice President, Governmental Affairs at the Kansas Chamber. Is there anyone else that wishes to speak as a proponent for Senate Bill 15? If not, we'll close the proponent section of the hearing, and we will open the neutral section of the hearing. And for the neutral section, I have Stephanie Mulholland, Heartland Credit Union. Welcome, Stephanie.
Thank you, Mr. Chairman. Good morning, committee. I'll be very brief. I know you've already heard from us on the contents of this bill. Just wanted to reiterate that we are neutral and appreciate the chance to come to a compromise, and we agree with the proponents that the amendments made on the Senate side are good amendments. I'd be happy to take any questions.
Thanks, Stephanie. Any questions for Stephanie? None online? Okay. So, Stephanie, excellent job.
Thank you, Mr. Chair.
Thank you. I do not show any other neutral. Do we have anyone else? Mr. Bruno.
Mr. Chairman, Tom Bruno. I'm appearing on behalf of Farm Credit this morning. You have Mr. Gray's testimony from when you heard the House version. We appreciate the Senate's effort to amend the bill and take care of our concerns, so we are appearing as neutral, and I wanted to make clear that we're still neutral on the bill without our concerns as previously discussed. And for Mr. Samsel, it's funny money just for you, buddy. So I'm happy to stand for questions.
Thank you. Any questions for Mr. Bruno? Official Bruno. No whistle, though. Don't see. Thank you very much. Anyone else wish to speak as a neutral on the bill? I show no written neutrals, so this will close the neutral section of the hearing. We will open up the opponent section of the hearing. And for the opponents, I show written only, but is there anyone that wishes to speak as an opponent to Senate Bill 15?
Members of the committee, I represent the Kansas Co-op Council. Brandy Miller is the president and CEO, and she is with us virtually if there are any questions that I can't answer. Just to review, we support the meat of this bill, which is the linked deposit loan program. Our only concerns remain with the privilege tax deduction for banks for ag loans, and that's strictly from a cooperative business tax structure. But if you have any questions, I'd be happy to answer them. Okay, and could you please state your name and affiliation so that our committee assistant can get that down? Shahira Stafford, Kansas Cooperative Council. Okay, thank you. Any questions? Representative Day has a question.
Hi, everybody. Thank you, Mr. Chairman. Hopefully you can hear me there in the room. I am just wondering if the legislative review clause might help with the concern that that opponents have on this privilege tax. Is there a possibility that that's the case?
I would probably defer to the revisor or staff that could maybe answer that question. Our concern is unleveling the playing field in our perspective as far as awarding a tax privilege to a for-profit institution and not requiring the same working guidelines that cooperatives have to operate under.
I see. I think there were some opponents as well who had mentioned that maybe the regulations are a little bit different and transparency concerns along with that. So I was hoping that maybe the legislative review process would help ease those concerns a little bit. But thank you so much for your help with that. I appreciate it. Thank you, Mr. Chairman.
Thank you. Representative Samsel.
Thank you, Mr. Chairman. One quick question, although I would like to note that Mr. Bruno's testimony was a bit hard to hear, but I think I understood it to mean it was a funny money mask. But I am glad to see that he's not wearing one of those masks that has the funny looking stuff with a whistle that allows and all that good stuff. But my one question, and I think Representative Day may be a step ahead of me, can you help me understand, please, what the opposition is to that? I didn't understand the technical side of that, or what the heartburn was.
The heartburn from the Kansas Cooperative Council, and I'll just state this real briefly, and from several large cooperatives across the state who have submitted written testimony, is fear that this could possibly bleed over into the ag retail cooperative space and really open the door to blurring the lines between for-profit and not-for-profit organizations in general. Specifically, again, cooperatives earn that tax credit, having to pass down our profit to our members via patronage and other ways. And so our concerns just remain that there's no guarantee or no provision in the bill right now that would require the same requirement for the banks. And if it's okay, I might ask Brandy Miller, who's on virtually, if she has anything to add to that.
That would be fine.
Certainly. Thank you, Mr. Chairman. Can you hear me okay?
Yes, we can.
So just to continue to build on what Shahira said, and the concern from our membership is really just that there are some certain benefits afforded to the cooperative business structure, and this particular bill allows a for-profit entity access to the same benefits without any of the business requirements or structure. And those business requirements differ across every cooperative business. On the ag retail side, there are some tax benefits afforded to the ag retail cooperatives, but they are required to pass profits down to members who then in turn pay income tax on those profits. And I know that that's also the case with the credit unions and Farm Credit, the financial cooperatives, and they're in the room, so I won't speak on behalf of them. But our membership is just concerned that this could potentially open the door and allow other for-profit entities access to not-for-profit cooperative business structure benefits without any of the requirements that are in place for those organizations.
Thank you for that. And Mr. Chairman, if I may, just a clarifying question for me. It sounds like there may not, and please tell me if I'm wrong, but there may not be any particular objection to the language of this actual bill, but maybe it's more like a slippery slope argument that we need to be careful where we're going moving forward.
Yes, our concern is just the tax exemption component. The language mirrors and gives the same exact tax benefits to cooperatives without any of the transparency requirements or any of the business structure requirements.
Thank you for the answer. I'm not going to pretend that I fully comprehended all of that down in the details, but I'll figure out my own problems later. So thank you for your testimony. Thank you, Mr. Chairman.
Thank you. And Ms. Miller, now does it, I think in this bill though, the overall goal is for the banks to use the savings to pass down to customers for lower interest rates. I assume that was understood, but the other question would be, I mean, would any of your members potentially be able to benefit from this? So it'd be kind of a, in some ways, while you have some opposition to the kind of the philosophy of it, on the other hand, you have members that could benefit from the lower rates because they might also be customers of Kansas banks.
Yeah, Mr. Chairman, thank you for that. I do think that's a fair comment, and the majority of the ag retail cooperatives in the state that we represent actually do business with CoBank. which is a cooperative bank. There's not a lot of cooperatives in the state that do benefit or that do business with banks. And so our direct members may not necessarily benefit from this. Again, I think the concern is really, there's no guarantee or provision in the bill that requires the banks to pass that exemption down. I mean, I know that's certainly the intention of the tax exemption component of the bill, but there's no guarantee in the language of the bill that those exemptions would truly be passed down to borrowers and not stay within the bank shareholders.
Okay, any other questions? Thank you.
Thank you.
And I will.
Thank you.
I'll point out that the written opponent testimony is from Brandy Miller, who you just heard from, Gerald Kimmerer, I'm sure I messed that one up, CEO Pride Ag Resources, David Crone, CEO Skyland Co-op, and Bob Standridge, General Manager, High Plains Co-op. So we have the written testimony in file for you. Is there any other one that wishes to testify as an opponent on Senate Bill 15? Representative Samsel, is your hand up from last time, or do you have a question?
Thank you, Mr. Chair. If it was appropriate or at the appropriate time, I had a quick follow-up question, now having heard from the opponents for Mr. Orrell, but I defer to the chair's sound judgment on that.
And who's your question for?
Mr. Orrell, if I can.
You can. Mr. Orrell, come on up to the mic.
Thank you, Mr. Chairman. And again, I'm a lawyer, so this banking stuff's a little bit fuzzy for me, but I think I understood the opponent's testimony to mean they may have some concern that I think she used the word shareholders might be seeing, I don't know the best way to describe it, but the fruits of this bill, if you would, rather than perhaps the end borrowers or, and I usually use the term little guys, if you will, but is that something that you could speak to, those concerns, or and you will obviously have much better terminology than me, but that's kind of what I understood the heartburn to be.
Absolutely, Representative Samsel, thank you for the question. Yeah, the concerns with that this money will stay with shareholders. Our whole argument up here is being able to compete on a more level playing field. Competition will drive these rates down. Are some of our other tax advantaged groups that do have these exemptions are able to offer lower competitive interest rates. So we're asking here to be able to compete. Banking and financial institutions is a relationship business as well. If we're out here telling the state legislature and you that we're going to be able to compete on a more level playing field, and we don't, we're going to have a really bad problem with our customer base. Secondly, the comment about no guarantee that these funds have to be passed down through. I would just state for the record that they don't also have statute that mandates or regulates them to put their extra money down to their shareholders. They do, and they do a good job of it, but just for the record, there is no statute for either party that has to mandate those are passed on. But I do believe competition will absolutely do.
Thank you, Mr. Orrell. That sounded very much like calling it both ways in our officiating world. My last question, if the chair would permit, would be, should there be language so that everybody's playing by that rules? Because it's a legitimate heartburn back in my district over coffees and everything else is it seems like the little guy is usually not getting a fair shake, and I'm not implying that's the case here, but certainly some of the things we see from the federal level in other places, that seems to be the case. So not to put you on the spot, but something perhaps our committee will consider moving forward. Thank you, Mr. Chair.
Thank you. Alex, thank you very much.
Thank you, Mr. Chairman.
Any other under our opponent section? If not, this will officially close the opponent portion of the hearing, and saying nothing else, this officially closes the hearing on Senate Bill 15. So thank you all very much, and we'll head into our second hearing today, which takes on a on a little different twist for us, but along a little similar guideline. It's the hearing on House Bill 2187 regarding first-time home buyer account. And so start out with a briefing from our revisor. In your packet is information on this, along with information on a fiscal note on this bill, which I think you will have in your packet today. And David, if you could start out and give us a briefing on this bill, please.
Yes, Mr. Chairman. Good morning again. House Bill 2187 would enact the First-Time Homebuyer Savings Account Act and establish an income tax addition and subtraction modifications for contributions to such savings accounts. Some of you that were here last year this might sound kind of familiar to House Bill 2516, which came out of the Rural Revitalization Committee. This is really sort of a reintroduction of that bill as it came out of committee, with just some of the updates to for a year's delay. So the first section of House Bill 2187 would provide the citation as the First-Time Homebuyer Savings Account Act. Section 2 is the definition sections for the act. It's kind of highlighted a couple of the definitions. Eligible expenses means a down payment or any closing costs that need to be included as part of a real estate settlement agreement, including but not limited to appraisal fees, mortgage origination fees, and inspection fees, or any down payment costs and fees that may be included as a part of the financing of the construction or for a primary residence. First-time home buyer is defined as an individual who has never owned or purchased under a contract for deed, either individually or jointly, a single-family owner-occupied primary residence, including but not limited to a condominium unit or a manufactured or mobile home that was assessed and taxed as real property, or as a result of the individual's dissolution of marriage, has not been listed on a property title for at least 3 consecutive years. Section 3 provides that on and after July 1, 2022, individuals may open an account with a financial institution and designate such account as a first-time homebuyer savings account to be used to pay or reimburse a designated beneficiary's eligible expenses for the purchase or construction of a primary residence in Kansas. The account holder shall designate a designated beneficiary to the account. No account shall have more than one designated beneficiary, but an individual may be designated as a designated beneficiary of more than one account if those accounts are held by separate account holders. So, a parent could set up an account for a child and a grandparent. It could be the same designated beneficiary. You just have to have different account holders. No account holder shall be authorized to designate the same beneficiary on multiple accounts by such account holder. The section also provides the following limitations on the first-time home buyer savings accounts. The maximum contribution to an account in any one tax year shall be $3,000 for an individual and $6,000 for a married couple filing a joint return. The maximum amount of all contributions into an account in all tax years shall be limited to $24,000 for an individual and $48,000 for a married couple filing a joint return. And the maximum total amount in such an account shall be set at $50,000. Section 4 establishes the purposes for which money in the account may be used. There's 5 uses that are eligible. Be used for eligible expenses relating to the designated beneficiary's purchase or construction of a primary residence located in Kansas. Used for eligible expenses related to designated beneficiary's purchase or construction of a primary residence outside of the state if they are active duty military and were stationed in Kansas for any time after the creation of the account. It can be used for the above expenses, but the contract for purchase or construction did not close. It can be transferred to another newly created account and can be used to pay service fees assessed by the financial institution. Monies in the account are subject to recapture and could be added to Kansas adjusted gross income of the account holder, or if the account holder is no longer living, the designated beneficiary, if the monies are withdrawn from the account less than a year from the first deposit in the account, or the monies are used for any purpose other than those eligible purposes in this section. If the monies from the account are used for other purposes, the account holder has to pay a penalty of either of 5% of the amount subject to recapture if the withdrawal occurred 10 or less years after the first deposit, and 10% of the withdrawal if the withdrawal occurred more than 10 years. So it's 5% if penalty if you withdraw earlier, 10% if it's a withdrawal later for other purposes. Such penalties shall not apply if the withdrawn monies are used for a designated beneficiary's purchase or construction of a home outside of Kansas, or the monies are from an account in which the designated beneficiary died and the account holder did not designate a new beneficiary. Section 5 requires the Secretary of Revenue to establish forms for an account holder to annually report account information, and requires the account holder to annually file with the account holder's state income tax return all forms required by the Secretary. The Form 1099 for the account is issued by the financial institution, and any other supporting documentation that the Secretary requires. Secretary of Revenue is also required prior to July 1, 2022 to adopt rules and regulations necessary to administer the provisions of the First-Time Homebuyer Savings Account Act. Section 6 states that no financial institution shall be required to designate an account as a first-time homebuyer savings account or designate the beneficiaries of an account in the financial institution's account contracts or systems or in any other way. The financial institution is not required to track the use of monies withdrawn from an account or report any information to the Department of Revenue or any other governmental agency that is not otherwise required by law. A financial institution is also not responsible or liable for determining or ensuring an account holder is eligible for a Kansas income tax modification, determining or ensuring that monies are used for eligible expenses, or reporting or remitting taxes or penalties related to the use of these account monies. Section 7 is the actual tax modification language. It amends KSA 7932-117. So this is for modifications to Kansas adjusted gross income for all taxable years after December 31, 2021. The amount of any contributions or earnings from a first-time homebuyer savings account, if distributions are not for eligible expenses or held for the minimum length of time, will be added back to the gross income of the account holder, or if the account holder is no longer living, the designated beneficiary would have to add those expenses back into gross income. There is also then the subtraction modification established for contributions to the first-time home buyer's savings account, and those amounts previously discussed: $3,000 for an individual, or $6,000 for a married couple filing a joint return, or amounts received as income earned from assets in a first-time home buyer savings account. So any interest that's earned in the account would be excluded from Kansas gross income. The bill becomes effective upon publication in the statute book or July 1st, 2021. I know there's a lot in this bill, Mr. Chairman, so I'd be happy to stand for any questions on that particular section.
Representative Hoheisel, you have a question?
Yes, sir, Mr. Chair. Thank you. Thank you, David, for that breakdown. Is this, we had this exact same bill last year, correct?
Yes, this was House Bill 2516 as it left the Rural Revitalization Committee last year. Yes.
Okay, and I mean, it's the exact same copy. There were no changes made other than dates.
Yeah, it's just the dates.
Okay.
Like I said, the committee amendment. There were a few small committee amendments last year that were incorporated into this, but those related to dates. It kind of changed January to July, and so it's been updated.
And did this pass the House last year?
Yes, it did. I believe the final action vote, was 123-2, and it just got into the Senate committee. And I think it's just as it got, with the pandemic, I don't think the Senate was able to really act on the bill.
Got it. Thank you, Mr. Chair.
Have any other questions? Thank you, David, very much. And we'll go and ask Melissa Rennick, our research, any comments that you would have to make, Melissa? to further educate us?
The committee's
Well, it
consideration.
doesn't sound like we do, so we will move on. And so this will officially open the hearing on House Bill 2187. And we will begin our hearing with the proponent section. And I have 4 proponents listed to testify. And our first one is Representative Brandon Woodard, District 30, Lenexa and Olathe, and he is appearing on behalf of the Kansas Future Caucus. Welcome, Representative Woodard.
Thank you, Mr. Chair. Thank you, Chairman Kelly and members of the committee. I am here today on behalf of the Kansas Future Caucus. The Kansas Future Caucus is made up of state legislators 40 and under from across the political spectrum. Caucus members work together to develop innovative post-partisan solutions to issues disproportionately affecting young people around the state. And we are one of 30 Future Caucus chapters in the United States. We're here today to provide testimony in support of House Bill 2187 for all of the reasons that you just heard outlined by the reviser. We believe that it's no secret that young people, post-secondary educated people are among the greatest exports of the state of Kansas. And we think that this will mitigate the trend of young people not buying homes and have a net positive impact. So you have our testimony. We're here to just rise in support of this bill. We think that it'll help young folks generate the savings to become first-time home buyers, and we urge your support of House Bill 2187. Thank you, Mr. Chair. I'd be happy to stand for any questions at the appropriate time.
We'll take questions as we go, since at least I have listed a limited number of those wanting to testify. Any questions for Representative Woodard? And Representative Woodard, as I was reading again on this first-time homebuyer plan, it's one that's like the 529 available in other states and seems to have been successful, and I can see why your future caucus is supporting it. But have you had in what you're doing really large interest in people participating in this program?
Yes, this was one of our first discussions, and in fact, in order for our future caucus to endorse legislation, at least 2/3 of our members must support it. To this point, I don't believe we've had any opposition from our membership. There are 18 state legislators in Kansas at age 40 or under.
So has your caucus thought at all about expanding it to old guys and older ladies? 40 and under, it used to not be too young, but it's darn young now.
Thank you, Mr. Chair. Well, the national organization defines it as 40 or under, but of course we have several social functions after the pandemic that we would be happy to have any of you join us for.
Any other questions for Representative Woodard? No. Thank you very much. Thanks for
Mr. Chair, if I may.
Hearing today.
Sorry, this is Representative Sampson. Yeah, my virtual hand is raised, if that's okay, for Representative Woodard. Very quickly, Mr. Chair, and I think I appreciate the Jayhawk that's on its tie. That's what appears to be coming through. But Representative Woodard, could you speak briefly to, and actually if it's not you, perhaps a different proponent, but to the cost to the state of Kansas, so whether it's fiscal note or general financial aspects, but compared to what we would hope the benefit of something like this type of legislation to be?
Mr. Chair, I'd probably defer to either research or the revisers for the fiscal note.
Okay, and from what's in our packet, the fiscal note looks like it's still being prepared on this bill, and I'm not sure what it was last year. That wasn't in there. I don't know. Melissa, are you online?
Yes, Mr. Chairman, I'll pull that up here real quick. If there's another question Representative Samsel has, I'll go ahead and, or if the conferee wants to speak to the benefit, I'll look and see if I can get us that information on 2516 in just a moment.
Okay, thanks.
Thank you, Mr. Chair. Yeah, I do not have another question. And in fact, I can withdraw that was kind of like an unfair, if it had comparisons to what happened last night during the Tampa Bay Chiefs game. So I will withdraw the question for Representative Woodard. Thank you.
Thank you, Representative Woodard, and we will, when Melissa digs that up, we'll pass that along. But appreciate you being here. The next proponent I have listed is from the Kansas Bankers Association, Kelly Van Swal. If you would give us your thoughts on House Bill 2187.
Thank you, Mr. Chairman. Can everyone hear me okay? Thank you, Mr. Chairman and members of the committee. I'm Kelly Vanswall. I'm excited to appear on behalf of Kansas Bankers Association in support of House Bill 2187. The reviser did a great job explaining it, so I won't repeat what he said. I'll just say that the KBA has historically been supportive of any initiatives we believe will spur economic growth, and we think this is a great opportunity to keep our young Kansans in the state. We look forward to helping our customers with this program. We believe that our banks are only as strong as the communities we're in, so anything we can do to help them, we're supportive of. On a personal note, I just bought my own home back in November, and I would have loved to have had a program like this to use. So I will stand for any questions at the time.
Are there any questions for Kelly?
This is Representative Hsu. I have a question.
Go ahead, Representative Hsu.
Kelly, I just want to know real quick, how excited are you about your new representative at your new home?
I'm so excited. I firmly believe I have the best representative in the state of Kansas. Thank you for the question.
Thank you. I agree. Thank you, Mr. Chair.
Any other questions? Representative Samsel, you're not going to disappoint us, are you?
Well, Mr. Chairman, I was trying to bite my tongue by not saying that the best representative in the state of Kansas might have tried to find a way to make this retroactive for her. But since I'm not that person, I'm not going to make any retroactive comments for this legislation. Thank you.
Okay, and you probably would have funded it for her so it would be available retroactively. Appreciate that. Any
Bingo.
other questions? Thank you, Kelly. Our next proponent, Stephanie Mulholland, Heartland Credit Union.
Good morning again, committee. I'm Stephanie Mulholland here on behalf of the Over 40 Caucus and also on behalf of Kansas Credit Unions. We represent over 690,000 Kansans that belong to credit unions as not-for-profit cooperatives. One of our beliefs that we were founded on is that no matter the economic status that someone was born into, that they should have the right to improve their financial security. We believe that House Bill 2187 is one more way to help Kansans do that by helping them achieve personal savings and eventually homeownership. Right now, almost a third of Kansas families in our state do not have a savings account to fall back on. Mr. Chairman, as you mentioned, these first-time homebuyer accounts are structured a lot like 529 college savings accounts. They encourage people to save for the future by giving consumers a direct tax incentive to do so. We've seen similar types of accounts have success, not only in Kansas, but in other states. There are at least 11 other states who have these first-time homebuyer accounts, including those states around us. Iowa, Colorado, Missouri, and Oklahoma all have these types of accounts in place. Another similar example of success with incentive type of accounts are prize-linked savings accounts, which this legislature approved back in 2017. And we've already seen the results of that in just 3 years. Kansas credit unions have helped more than 1,000 families, many of whom did not previously have a savings account or an emergency fund to fall back on, save more than $4.8 million using prize-linked savings accounts. So we see House Bill 2187 as one more way to encourage Kansans to establish those savings for long-term goals. And we also see it as one more tool in the state's rural development efforts, providing an extra incentive for people to save here, stay here, and establish their home here in Kansas. With that, I'd be happy to take any questions and ask for your consideration of this bill.
Thank you, Stephanie. Any questions for Stephanie? Don't see any. Thank you, Stephanie, very
Thank you, Mr.
much.
Chair.
And the final oral proponent that I have listed is Mark Toom, Vice President, Governmental Affairs, Kansas Association of Realtors. Welcome, Mark.
Thank you very much. Chairman Kelly, members of the committee, thank you for the opportunity. It's blue. Thank you to the opportunity to appear today to express support for House Bill 2187. My name is Mark Toom. I'm with the Kansas Association of Realtors, and I'm going to cover a little bit about some of the benefits of this. I think a lot of the benefits of home ownership are certainly apparent, but I will highlight a few economic and societal benefits. Home ownership rates translate to community responsibility, business, civic, and economic stability, family security, and even educational achievement, as children in owner-occupied dwellings achieve higher rates of high school graduation and college attendance. From an economic standpoint, it certainly deals with economic development and wealth creation, which I think that this is certainly not meant to be an immediate stimulus type of a proposal, that I think it's really about long-term growth for the real estate industry, which in 2019 accounted for about $27.7 billion, or 16% of the gross state product, with estimates that a sale of a median-priced home in Kansas generates about $68,000 of economic impact. Numerous states have created these programs, as has been mentioned, and I think that the lessons learned there is to keep two things true: to make it simple and significant. It should be simple in terms of setting up an account, and simple in terms of reporting and keeping records as well. It also must be significant in that it provides a strong enough tax incentive to motivate people to participate, and we believe this bill does just that. So given the economic and societal benefits, we encourage you to support this policy that's for sustained strong home ownership. And thank you very much, and I'd be happy to answer questions at the appropriate time.
Thank you. Mark, any questions for Mark? Don't see any, Mark. Thank you very much. Committee, I show no written proponents for House Bill 2187. Does anyone else wish to speak as a proponent to House Bill 2187? Representative Hoheisel.
Thank you, Mr. Chair. Just a heads up to the committee. Rich did just email out the fiscal note from last year's bill, HB 2516, for you guys to review if you would like.
Thank you, Representative. Since my email does not work, I don't get those emails. So I'm going to junk out this Dell computer and bring one from home, I think. Anyone else wish to speak as a proponent? If not, we'll close the proponent section of our hearing and we'll open the neutral section. I show no one wishing to speak as neutral, and I also show no written neutral comments. Does anyone wish to speak as a neutral on House Bill 2187? If not, we'll close the neutral portion and we'll open the opponent portion. And on the opponent portion, I show no written or oral opponents to House Bill 2187. Representative Lynn.
Thank you, Mr. Chair. I apologize. I think my question is probably for the revisers.
Okay, David, you ready for a question?
I am wondering what the significance is for 3 years for after a divorce in section 2, page 2, lines 4 and 5, when it's the definition of a home buyer.
Mr. Chairman, I think I don't know this. I don't know if I could speak to what the significance behind it. 3 consecutive years. That was just how the bill was requested. But I mean, that is certainly a policy decision, I think, for the committee or for the legislature.
David, do you know, is the language in this bill used from a model for other first-time homebuyer bills, and that's a common language or not?
Yeah, I believe a lot of this language was modeled off of some other states. I think Missouri was a large component of some of this language, but I'd have to go back and see if that 3 years is there. I'm thinking so, but I don't know for sure.
Thank you, Mr. Chair. I'm just curious to know if that's significant and if that's necessary in the case of a divorce.
We'll see if we can get that answer for you. Kelly, do you happen to have that answer?
I don't have that answer. We did not draft this legislation, but I'd be happy to do some research and see if I can find something for you too.
Okay, that'd be great. Thanks. We'll get it for you, Representative Lynn. As far as opponents, anyone wish to speak as an opponent to House Bill 2187? If not, we'll close the opponent section of our hearing, and this will officially close the hearing on House Bill 2187. And remind the committee that on Wednesday, our plan is to work both Senate Bill 15 and House Bill 2187. So that will be one where for your vote to count, you'll need to be either in the room or inside the Capitol on our WebEx meeting. But any other business for the good of committee this morning? Don't see any. Well, thanks very much for being here on an icy, sad Monday morning. And we will be adjourned and see you on Wednesday.